Anuj, thank you very much for being here today. We're very excited about everything that's going on here in India. But when I travel to different parts of the world, talking to different investors, and I am, a salesman of India. I talk a lot about India, and I'm a firm believer. Just the last 12 months, I've been here 5 times.
Wow.
That's how much I believe in India as the place to be when it comes to real estate, especially. But every time I say that, they ask me, but why? I get it, that's hot, but why you think mid and long term about India as well? How would you answer this question?
Yeah. Thank you very much for having me here. It's always a delight to be at the GRI Club. So, it's a great opportunity to have this conversation with you. I've been in this industry for nearly 30 years. And I must say that I have not seen this kind of potential opportunity, momentum, investment being returned back with profit to the investors in the last 30 years. And it is across all the segments of real estate. So it's not only just the residential, which at this moment in time is at a 15-year high from the sales perspective. And then that's because a lot of the youth, they're getting employment opportunities, the pays are increasing, they want to upgrade, there is more aspiration. On the luxury side, the stock markets are doing well, the corporates are doing very well, there are large bonuses, dividends, as a result of which luxury is doing well. But even the entry level, many years ago, say about 20 years ago, the average age of the first home buyer was mid-40s. Today it is late 20s. So it's young, aspirational, and wanting to do something, having sort of very quickly in their respective lives achieved something. And hence the first thing that they want to do is buy residential to demonstrate that I've arrived in life. The second segment is offices. And, office is actually a bad word globally. Because nobody's getting back to the offices. And, if you look at more mature markets, particularly in the Western world, it is difficult to get people 5 days a week back in the office. Yet in India, this year, 2024 calendar year, will be the best ever in the history of India, ever, that we would have had the leasing. 72 million square feet of gross leasing. And, when I speak with investors, they're like, what is driving it? What is this growth coming in? Is it that everybody started to come back to the office? Is it Indian corporates are expanding? Is it more global companies who are coming in? I think it's a mixture of everything. It's all the global capability centers that are coming in here, huge amount of growth that we are seeing, largely from mid-tier American corporates who had never ever set their base in India, now saying we're very comfortable with India, to set up our own base in India. We're not going to outsource it to a third-party service provider. We will set up our own global capability center. By virtue of that, the space that is being taken up by these multinationals, again I say is largely North American, is just humongous. Equally, Indian economy is doing well, as I said earlier. So Indian corporates are continuing to expand, startups are continuing to expand, and people have started to come back to work in India. Also, the homes are not as big as you have in certainly in the US, where you have your study room to yourself and bigger homes. These are very small homes with joint families living in there. So when the doorbell rings, the cat, the dog, the in-laws, the domestic health, everybody is like rushing towards that. So people do want to then say, look, it disturbs me sitting at home and working. So most of them do come back to the office. On the private equity side, again, the amount of money that is rolling in, whether it is to buy completed assets like the retail malls or the completed offices, that has been pretty decent. Not as much money has poured in from private equity on residential. Their private equity is still skeptical. Resi for sale, I'm not so sure that there is comfort from foreign private equity. Domestic funds are still willing to take that risk, but foreign funds are not. And, for lease, resi just doesn't work because the yields are 2.5%, 3% compared to offices which
Maybe
are
one
at
day, yeah.
7 to 8%. So it doesn't make any sense to do resi for lease and resi for sale, not as much comfort. The last sector, which is really gained momentum over a period of time, which is industrial warehousing, and I'll put data centers in that that has done exceptionally well. Not only because Make in India, from the government has really made sure a lot of the production is now happening in India, but also, most of the multinationals are saying China plus one. And in that plus one, India is coming up. So many of these multinational companies who are only outsourcing it to China are saying is, look, can I also have another base? And let's explore India as a basis. On the warehousing side, because the e-commerce has picked up so rapidly, so, all the e-commerce companies are wanting to buy, not buy, lease warehouses. So in a nutshell, it does appear is that the sun, moon, stars, earth, truth, everything is aligned at this moment in time. But I must put in one caveat. I've been here earlier as well, where I thought is that everything is firing beautifully, and then we did a self-goal.
Yes.
I'm hoping this time we don't really do that.
Yes, that was my following question is, I have seen different kind of markets. It happened in Brazil, for example, back in 2012, 13, and I remember some big funds going there and say, it's too hot, it's not sustainable the way things are, and they were right. You look at what happened in 2015, 16, 17. I saw that in Mexico in the past as well. In markets that are not mature yet, there is this tendency. At the same time, I get a bit more comfortable here to believe in India when I see the new government with the continuity and with everything that's going on here. But do you worry that we might have anything hidden behind the bushes that could prove us wrong? Is there anything that would keep you up at night?
I think it's a very interesting question, and I do ask that to myself: is the market overheated? Is there something which is lurking there, and that may just sort of pounce it? I'm not really able to put my finger on it, beyond maybe global geopolitical stuff, which is, the various
Which
wars
is out of control.
Which is out of control. Now, if something happens there, then obviously everybody gets impacted. So I'm sort of keeping that on one side. As far as the domestic economy, the stability of the government, within the real estate sector, the way that the government has put in the laws at this moment in time, doesn't appear to me is that the market is getting overheated. Doesn't look like speculators are in this market. In terms of the offices, particularly very consolidated, very mature, developers who are in that space. Private equity, who's been in India for a very long period of time, they know, how to play this, are the ones who are really investing into buying these completed office assets. So overall, it doesn't appear to me on the prices, whether it's residential or the offices, that it's a heated market. It doesn't look that the yields have compressed to the extent that I feel that they should. So in my opinion, there is still more headroom in there is. And third is that the demand that is coming in is really coming in from, on the residential side, end users, and on the office side, most of these multinationals. So doesn't appear the political stability, sort of macroeconomics within India, the Indian economic sort of way it is chugging along at this moment in time. And on the real estate, the guards that the government has put in doesn't look like, the sort of ball is going to go in the alley.
Yes.
There are enough safeguards that have been put up.
Interesting. Just a final question. Again, trying to put myself on the place of the international investors that are analyzing India. There are two questions they ask me, and I believe that you could answer much better than I could. First question is about corruption, which is something that, in any country that's not mature, there's always a challenge when it comes to corruption. And the second point they ask me is about liquidity. okay, let's say I deploy a few $1 billion there. How can I exit? How easy it is for me to exit?
Yeah, I think both are very, very valid question. Is that, is the corruption still there? It's an emerging market. Real estate is not as transparent, in an emerging market. And the second is, what's my liquidity? Okay, I'm happy to spend, billions of dollars, but how do I get back with my return? I think the second one is relatively easier to answer because there are now instruments that have come up on the public markets. So there are 3 office REITs. So if you're buying offices, you have an ability to either do a REIT yourself or sell it to one of these 3 REITs, and it's publicly traded, so you know.
And if I may, that actually, I tell them, it's actually more difficult for you to place capital in the country because the domestic market that understands very well will compete with you. And they have so much money now there. You might not need your money so much as they used to need 20 years ago.
Yeah, I agree with you. I mean, today, and it's a very valid point, is today, I think the balance is tilted in favor of the domestic capital.
Correct.
In there. So domestic capital is also very keen to buy these income-yielding assets. Family offices are very keen. You have REITs. On the retail, you have the first REIT, which is run by Blackstone, called as Nexus. And I'm hoping in the next few quarters, you're going to see on the warehousing side, maybe publicly listed companies coming up on the assets where you will be able to sort of sell it to these publicly listed companies. So there is enough exit.
Absolutely.
And not only that, there are many who've been able to demonstrate it. And 2 or 3 that come to my mind who've been able to exit billions of dollars. Blackstone, very credible, and they've been able to exit and demonstrate it to their investors that we've been able to get decent returns back from India. Brookfield, GIC, CPPIB, all these guys have exited the assets that they initially, and now they have come back again and, investing. I think the first one is a little difficult to answer, in corruption. It is an emerging market, so it is difficult to say is that there is zero corruption. I must, however, say is that in the last 10 years, it has gone away to a significant extent. What it was 10 years ago, say in 2012, 2014, it was very different India to what it is today. A lot of it is with the help of digitization, technology, the transparency that right from the sort of central government that is being pushed down, and along with that, the accountability. I do feel is we are moving towards getting more and more mature and hence cleansing that. But is it that there is no corruption? I would be telling a lie.
But if I may, when I speak to global investors that are here in private, I ask the same question. They say, look, it's way better. It's with technology, the transparency, and the way things have been done. You go to central government, is 100% different. If you go down scale, you still have some challenges, but you cannot compare. So
I completely agree with that. And that is where my sentiment is as well, is that it has cleansed to a very, very large extent. Can you do business ethically? Absolutely you can.
Yes.
In there is. Is there a little bit that goes on to make sure that there are things that are expedited? You can. But if you want to avoid, you can avoid in that. So it is more, I would say, discretionary, that corruption. But again, many of the US corporates work in here and they do a fantastic job and, they don't get bothered because they don't venture into that part or that category of the asset class.
Anuj, thank you very much.
Thank you very much. Always a pleasure.